As we like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around and look for something to trade. So we always start by looking at the SPY, which, if those of you that are new to us, it's a ETF, exchange traded fund, which mimics the S&P 500. So it's basically one stock that has like 500 stocks lumped into it. But anyways, this is the S&P 500. We usually use it as an index to tell us how the market is doing. I don't need to tell you much because the market has essentially been going straight up since March. So after the tariffs, which is right here, this whole tariff scare, the market's been on a steady climb upwards ever since, which of course means volatility is also heading down as well. If we look at the NASDAQ, it looks almost the same. And if we look at the Russell, again, it looks almost the same. Only difference is it's not quite as high as the other two, but it's essentially near all-time highs as well. So they're all kind of in the same boat. So volatility is low everywhere. What are we going to trade? Well, it's earnings season, so we have to go to a stock that's past earnings. So let's go to Chipotle, CMG. You can see earnings was here, and there was a huge drop right here for earnings. And then it kind of basically stayed around there. But you can see as well, volatility has collapsed. It obviously was pretty heightened right here before earnings, and then once earnings are over, volatility always tends to drop. So what are we going to do? Well, myself, being a contrarian, my thought process is over the next 45-ish days, I'm hoping that this thing, may go up and down, but hopefully over the next 40-ish days, it's going to tend to kind of bounce and head back upwards. And because volatility is so low, what I'm going to look to do is buy a vertical, and I believe the price is going up, so I'm going to buy a call vertical. If you have the opposite assumption and you think it's going to continue down, you would buy a put vertical. But let's go ahead and buy this call vertical. So we go to the trade page. I'm going right here at 40 days, which tomorrow will be 39. And I open this up, and when I buy a call vertical, what I do is I always start with the call right below the stock price, and I sell the call directly above the stock price, meaning that the stock price is right between my two strikes, right between my bought and sold strikes. So when I do that, if I buy this 46, 47 vertical, pops up here. And when it comes to buying verticals, if you know my rule set, it's I have much more leeway than a regular selling vertical. Selling verticals, I'm very strict at 33 to 40 cents per dollar width. When it comes to buying them, it really comes up to you. I'm fine myself in the 45 to 55 cent range, but that's up to you. You can pay more. All that's going to happen is you can make less. So right now, if I buy this for 47 cents, which again is between my range of 45 to 55, in this case, if I pay 47 cents, because it's a dollar wide, it means the most I can make is $53. So the more you pay, the less you can make. So as an example, if you said, "Oh, I'm okay, my rules are loose, I'm willing to pay 70 bucks for this." Okay. If you do that, then the most you can make is 30. And if you're fine with that as a maximum profit, again, totally up to you. Buying vertical rules are very personalized. You do whatever you believe and whatever you're happy with. Selling, totally different ball game. So in this case, this totally fits my rules. Again, I'm looking for 45 to 55 cents. This is at 47. So tomorrow, if everything stays the same, I'm going to buy the 46 call below the stock price, sell the 47 call just above the stock price. It's a dollar wide, and I'm looking to pay myself no more than about 55 cents for this trade. And that is our trade for tomorrow. I am excited to let you know I've completed a book that is now available to everyone that wants to get it called Learn to Trade in 7 Days. This is a book that will take you from absolute ground zero as far as knowing absolutely nothing about options all the way to trading them. Now, I'm so intent on getting this book to you because I really believe it is such a valuable resource for anybody and everybody that I'm going to offer an incredible deal on this, so stick with me on this. But before we get there, I want to show you what the book entails. The book is broken down into 7 days. Day 1 being what is an option. You'll learn everything about options themselves. We'll compare stocks versus options. Then we'll get into basic option strategies like the vertical. And finally, we'll wrap it up with how to trade verticals and then the making and managing of trades, which is to me the key to success long term above all. Now, as I mentioned, if you get into it now, if you go to this link, you can get this book for only $9.99. And I know that may not appeal to a lot of people because a lot of people aren't into books, but I'm so intent on getting you this book because I really believe it is such a valuable resource to anybody and everybody that I'll also throw in any one of my courses right here available on Udemy right now. So for only $9.99, you not only get the book itself, but you get one free course, which can be valued for as much as $100 depending on when and where you buy these courses. Again, just go to this link here and it'll take you to this page where, as you can see, you'll get the book and one of my courses for only $9.99. So really can't be beat. So again, just to reiterate, go to this link here. You will get my book, which you can hang on to forever, and I really believe is such a vital resource. I'm throwing in a course to really get you motivated to buy this book. That's how important I really believe this book is. The book and one of my courses for only $9.99 simply by going to this link. Please jump on this opportunity. It is something you really will be happy you did.